Hello, welcome to today's session of Traders Talk. And today I have a very exciting topic. And if you look at the way I dress, right, it's a bit casual today. Yeah, because the topic which we are covering today is on Facebook. Oh no, not on Facebook. Now it's called It's not Meta. Okay, so I try to actually look like Mark Zuckerberg, yeah, trying to uh, mirror his style in a casual T-shirt, yeah. Okay, so welcome to today's session on Traders Talk. I'm Meng Hon, and if this is the first time you're here, welcome to Traders Talk, a show where you will learn how to actually trade in the stock market using options, and at the same time to learn on financial literacy. Yeah, financial literacy. And this is actually a great show, and we have been having this show for almost about four to 5 months. Yeah, and it's really exciting for me to continuously share so much content to you guys, and I hope for those people who are actually following us will benefit from this show. Okay, let's start. Okay, if you can actually like and share, so that more people can actually see this, so your friends who are also interested to learn trading, then please by all means share it to them so that more people can actually see. Okay, so today we'll be covering Meta. uh, if you do not know what is Meta, it is actually the new name for Facebook has changed their name to Meta. What does that mean? Actually, I don't know. Yeah, I don't really know what it means, but I look up Google, and basically uh, what it meant is a short form for Metaverse. And if you have actually played games before, played games like in Roblox is one of the games, or all these virtual reality games where people dwell um, in characters, and they actually mix and play games and connect with each other. So this is actually what Facebook is trying to also create, a virtual reality world where people can connect and communicate inside a, a virtual reality place lah. Even though you are actually millions of not millions, thousands of miles away lah, thousands of miles away. And of course, this is actually a great thing. People are actually looking forward to it. As a result of that, perhaps the story which they actually created intrigued a lot of people, and people saw a lot of opportunities which uh, Facebook actually mentioned during their launch or their change in name. Yeah. So many things to come. The virtual reality spectacles has already been launched. I think they are now branding it together with Ray-Ban, where you can actually see the video play feeds or something through the Ray-Ban glass lah. And of course, this is also part of Facebook Oculus, I think Oculus business, where they are talking about the virtual reality eyewears and all these kind of things. Yeah. And of course, this is not a thing which is actually far away. I mean, it's already here. Besides Facebook, of course, you have companies like Snap, which has it. Google tried to do it, but quite badly. Yeah, and of course, I think in the next 2 or 3 years, perhaps, these kind of things might even replace the handphone. You do not even need to have a handphone. Yeah, and of course, if that can become a reality, then of course, the company, which is Facebook or Meta, is going to change into another animal. And of course, there are many opportunities if you know how to actually capitalize on it. Yeah. So what we'll be sharing today is 7 ways to profit on Meta. Yeah, in the metaverse world, which we'll share later on in our talk show, in our show here. Yeah. And we'll cover again some things which is actually happened on the market. And if you look at this is actually S&P 500 lah. So of course, if you look for the past 2.5 weeks, the market has been going up non-stop. If you look at this, right, it has been going up non-stop all the way up. I mean, whether it's good or bad depends on what kind of positions you have lah. I mean, of course, if you have all the bullish positions, a lot of companies have already gone up in price together with the market. And of course, if you were a bit skeptical when the downtrend was here, you were looking at where the market will go and standing on the sidelines. Of course, you may not have profited when the stocks or the prices actually rebounds about 2 weeks ago. Yeah. But anyway, it's not too late. Of course, if you look at the trends now, it is still very bullish. It's still very bullish. It has breached the previous all-time high here, and it is actually creating all-time high practically every day. Every day is a new high. Yeah, and of course, earlier today, we did saw in the futures market, the S&P futures, right, that it was actually a rate about 7 or 8 points, something like that. Yeah, down lah. Yeah, and just before we started the show, I saw that the position has already improved to about -1 only. And of course, when the market open, potentially will go back to green. It may continue to actually go up, but I would think the market would be a bit cautious between today and tomorrow, mainly because there is actually going to be a Fed meeting on Wednesday. And having said that, whatever comes out from this Fed meeting, right, the market wants to be bullish. The market wants to be bullish. The market just wants to go up and refuses to go down. Yeah. Although I want it to go down, because too high is sometimes also not too good, right? Yeah. So this is S&P. The same thing actually for the Nasdaq, right? Nasdaq 100, right? NDX has also gone up together with the whole overall market lah. So a lot of companies, although some of the earnings last week were actually quite bad, right? The market is still very bullish. In fact, the Nasdaq went up even faster than the S&P, the S&P 500. Yeah, it went down faster. It went up also faster. Yeah, and if you look at the last candle here, right? Yesterday's one. Let me just make it bigger. I think it is actually quite bullish. You can see the long tail down here. If it's too small, it's okay lah. You see a long tail that is actually pushing all the way up. You see, yeah, it went down and then later it actually push all the way up on close. Yeah. And if you saw earnings last week, Amazon went down about 130 over points on after earnings. But towards the day on the earnings day, right, it recovered almost half of the downward move. Yeah, and closed maybe about 70 over points down. And in the next days, it also continued to actually go up. And then Apple did their earnings. Earnings were more or less on target, but of course, because of some bad news on the shortage of chips, which will affect the production going forward in the next months, right? It dropped about $5 after it announced its earnings. But of course, again, the market, like Apple so much, it recovered again almost half of what they have actually lost on that day. And towards the next few days, Apple was just moving sideways, not too bad. What else? Tesla. Don't talk about Tesla lah. Yeah, I'm no Tesla fan. If there are a lot of Tesla fan outside there, please let me know. Yeah. Oh, enlarge the slide. Okay. So let me put it bigger. Okay. So on the Tesla, of course, Tesla went up to become a $1 trillion company. For those who like Tesla, who buy Tesla, congratulations! It moved up from about $400 over to 1,000. Yeah, but having said that, don't forget it has already done a share split last year. And I think during the share split, it went all the way up to $1,000 over dollars, split to four. Now it go back to $1,000 over dollars. So it's like you're having, if you have one share, it's like becoming 8 shares. Yeah. Okay. So that was Tesla. What happened last week? Google also shot up a lot to again reaching all-time high. Maybe I can also share you the charts. Just let me change the share screen. Okay. Oops. Google. Okay, yeah, if you look at Google, yeah, Google shot to all-time high about 297 something, 2973. Yeah. So of course, if you look, previous high was actually here. It shot up after earnings to 2970, 73 lah. I took off my investment shareholding in Google lah. I sold it out at 2970. I sold it at 2970, and hopefully waiting for it to retrace back to maybe about 27 level before I pick it up again lah. Yeah. I feel it's too high lah. You can see that it went up about 130 points on that day. So when it was almost reaching the top, right, I sold off my positions. Yeah. So what else? Netflix, of course, Netflix earnings was even much earlier lah. But again, Netflix is actually quite strong. People like Squid Game so much that recently, no, only today I heard that there was a Squid Game crypto scam where people started to buy squid crypto, right? And they lost all their money. Okay, so if you are the unlucky ones who got scammed buying script tokens or something, I'm very sorry for you lah. Yeah. I mean, those are the things lah. I mean, if you want to actually chase for quick money, right? Then of course those are the risks which you can actually get into if you don't do your due diligence properly. Apple we have covered. What else? Apple we have covered. Now you see Apple is here, right? Yeah. And of course, if you actually follow us on the what is that? The iPhone 13 challenge, right? The first 3 positions which we have actually opened, we actually closed them all before earnings, and all 3 are actually profitable. So far, just on the 3 little positions which we did, right? The profit was about 261 or 281, if not mistaken. Yeah. So in the next days, we will continue to actually make some trades on Apple. I feel that Apple would go a bit sideways before it actually go higher lah. Probably within today or tomorrow, mainly because of the meetings, people are not going to put so much of positions into Nasdaq stocks or the tech stocks. Mainly, of course, because of the concern of the interest rates, and how the Fed will actually work on their tapering, Yeah. So maybe today and tomorrow, it will probably go down a bit. After tomorrow, the stocks will see whether it goes up or go down lah. But regardless of that, right? If you look at Apple, right, um, it's quite strong compared to the other FANG stocks lah. Even earlier when the market went down, right, it was always hovering around here, yeah. And when the market went up, it straight away go down. You see, so even if the news were actually bad, right, I would think that this around this level, 135 to 145, would be the level where it will stay lah. On top of that, of course, I would say Apple would probably spend a lot of money to do buybacks, because earnings have already passed, right? So now they are actually allowed to go back to do their buybacks, right? So a lot of companies will start their buyback program when their stocks get hit or going down, right? They will do their buyback, and the prices would probably maintain strongly at these levels. Yeah, so that's what I think lah. Yeah, that's my personal opinion. Then, and that's how I will actually trade on these stocks. Yeah, trying to actually get into positions where they will actually stay around this level. Yeah. So if you have not joined the iPhone 13 challenge, right, please go and register yourself. Let me put in the iPhone 13 challenge. Yeah. So this is the iPhone 13 challenge link. You can actually still register, and when we do trades, we will actually inform you. We will actually inform you. What other stocks you want me to actually cover? Do you have any stocks you want me to comment? You can also post it on the chat box, so I can also give some views on those stocks. Apart from those, the payment stocks has actually also got hit a lot. Stocks like PayPal. Oops. PayPal. Is it PayPal has actually gone down by quite a lot here. Yeah. And it's actually going through the previous lows here. Yeah. Mastercard has also gone down by a lot here. If you look here, yeah, it's going through the previous lows. These are the previous lows somewhere in February or March. During the February or March market downturn, right? They actually hit the lows here. So now they're actually going back to those lows, you see. And of course, Mastercard being one of the key payment players, right? Yeah, we can actually see that the potential for it to actually go up back in the later months is actually high. So this is again maybe some opportunities, yeah, to actually look at some positions. Yeah, you see the lowest is actually at 312. Now it's like 330 or 335. Yeah. Visa is the same. Yeah. If you look here, these are the positions. Yeah. The previous low was actually at about 205. Now it's actually trading about 213. I would probably wait for it to actually go down more. Yeah. At this level, I'm also uncertain. I would probably wait for it to actually go down more to about 205 or 200 here. Yeah. Then of course that gives a battery entry point for the stock. Yeah. If you trade options, of course you can even go to below 195. Yeah. Historically, you see 195 is actually the level where it's actually very strong support at 195. If you can trade If it goes down to 200, you can do options trade at 195 levels. Then of course it would be quite safe, I would say. No guarantees, but of course this is actually already a very low level. Yeah. The China stocks, the previous week was actually quite bad. The stocks like Baba has actually gone down a lot during this time. Oops. Okay. It has actually gone down by a lot. But yesterday itself, Baba and all the Chinese stocks have started to shoot up again. Yeah. And the strongest being Baidu. Yeah. Baidu actually went up by about $7, $8. $8, if not yeah. You see, Baba, Baidu, this Baidu. Yeah, Baidu went up by $8 here. Yeah. JD also went up. I think all the Chinese stocks shot up yesterday. JD's shot up about 422 yesterday. So much. Yeah, 422. Yeah. JD is only 80 dollars stocks. It went up by $4. And of course, when all these stocks like Baba, Baidu, PDD also went up, then of course don't talk about SE lah. SE sure go up one. Yeah, you can see SE, C Limited C Limited going up. Yeah, yeah. 11/11 sale coming this month. Yeah, and of course all these stocks are component stocks for KWeb. KWeb actually took a very bad hit last week. Last week KWeb actually took a very bad hit. It went down, I don't know, $3 here. Yeah, more than that. So it went down from last week was here about from 54 all the way to about 40 something. Yeah. And of course, yesterday, with all the component stocks in its ETF going up, it went up by about 5%. 5%. So $256. Yeah. We have a bit positions on KWeb. Yeah. We do a lot of positions on KWeb. Yeah. Because we were expecting the Chinese tech stocks to actually go up. Yeah. HSI, how did it do today? HSI still down. Yeah, but you can see this is actually a very long candle. Yeah, HSI is still going down. Yeah, this is a Hong Kong Hang Seng Index. Hang Seng Index. Yeah. So this would be the more on what happened last week, and of course, what are my views or some of the things potentials coming in the next weeks. Yeah. So I'm still bullish on Chinese stocks, on the U.S. tech sector. I would be a bit cautious up till Wednesday lah. Yeah. So today, some of the positions like on Facebook's, probably I would start to hopefully continue to go up, and I will actually start to exit some of the positions for at least 1 or 2 days before I enter again. I mean, for this are actually short-term trades, not long-term investments. So of course, short-term trades, if we already make some profits, it's okay to actually take the profits off the table. Yeah, because for Facebook, we put in the positions even before the name change. After the earnings announcement here, right? Yeah, when it actually dropped down here, we already load some positions, some trading positions to take the opportunity of the dips lah. Yeah, because if you look at Facebook, right, historically it rarely drops down to 200 EMA lah. It rarely drops down. Of course, when they drop down 200 EMA, subsequently go up, drop down, go up, and this is again it starts to actually drop down to 200 EMA, even below 200 EMA. And of course, after the name change announcement, right, it actually shot up again. Hopefully, today can continue to go up, but we see a bit resistance at this 150 EMA. You see that it goes up yesterday, right? It shot up all the way here. I think yesterday it went up by $8 to $9. Yeah, and when it touch here, it actually bounced down and closed only at the $6 what is that, $6 increase. Yeah, if today it can actually go up a little bit, that would be good. We can exit the trade. Let's see what happens in after Wednesday. If it continue to go up, it's okay. We will definitely find more opportunities to trade it, which I will also show you today lah, how to actually profit from Facebook in 7 ways lah. Riding it up. Okay. So if you have any questions, you can always post. I can help answer any of them regarding stocks or regarding markets. Is also okay. Although I look like Mark Zuckerberg today, right? only in t-shirt lah. Other than that, the face not as handsome as him lah. And then let's share back the presentation. Okay, so this one we covered. Okay, Meta. I explained earlier what is this Meta. Do you guys know this? Metallica? Who knows Metallica? If you know Metallica, then I can guess your age. Anyone who knows Meta? Yeah? Shy, is it? Okay, Metallica is actually the rock band. Yeah. So it's actually a rock band in the 80s. I remember when I was young, when I was actually schooling, and we hear a lot of all these rock songs. And it's all really the headbanging songs. Headbanging songs with the guitars and all this. Yeah. So we were very hip back then, and with all the what signs, yeah, rock signs, right? And the tattoos, right? You know, the face drawings lah, the rock band sort of drawing with the tongue with the tongue with the, what is that, the earring or something in the tongues. Those are the rock times lah. Yeah, I remember a lot of my friends are also Metallica fans. Yeah. Okay, so this is not the meta of Facebook. So this is a sidetrack. Yeah. So what I wanted to say is meta rocks, and when meta rocks, we actually want to profit from this. Yeah. And there's actually 7 ways which I'm going to teach you how to actually profit on the rise of Meta. Okay, rise of Meta means Meta will continue to grind back up to its all-time high lah, because up till now it has probably retraced about 15%. And with the new vision, with the new hype, maybe it's a hype, I don't know. I mean, people buy in lah. Yeah. Although the younger generation still don't buy in, my kids don't buy into Facebook. Yeah, is still very much for old people like us. And if you have actually seen the promotion video which Facebook put up, right, very cringy one, and to actually attract the younger crowds, I think this is the only failure so far on Facebook, that the crowd is actually still the older ones, the age the age the age, and the younger crowd is still not capturing them, as compared to other platforms like TikTok. sure win already, man. TikTok win miles away as compared to Facebook. Yeah, they have nothing to scroll on Facebook, whereas on TikTok, they will continue to actually scroll and look at all these videos. Yeah, um, uh, that's the downside lah. Yeah, of course, if they start to actually come out with all these new things, hopefully they can get the crowd lah. Otherwise, they would be the generation gap will be there, right? And in the next 10 years, the company might come down because the popularity of the spending, the people who actually start to spend money lah, in their 20s or in their 30s are no longer buying into Facebook. Yeah, uh, the old people like us already retired lah, no money to spend anymore. Yeah. So 7 ways to profit. And for me, when I say 7 ways to profit, I will actually teach you how to actually do it in a way which is actually beneficial. This is Facebook price. Yeah, it has gone up and hopefully go back up to about 390. Is it 390? 390? Yeah, about 390. Yeah, 390. So now it's actually about 330, I think. Yeah. Okay, so one way you can actually do it is just buy share. Buy share. Current price is 330. Just go to the market, buy 100 share, and plow in 33,000 US dollar. Does that sound good? Not for me. $33,000 is a lot of money, you see. So a lot of people do not have $33,000 to splurge on Meta. So what do you do if you don't have $33,000, but yet you actually want to ride on the potential that these $330 stocks will go back up to 390 or even more? Yeah, how to actually do that if you do not have $33,000 to splurge? Yeah, and of course, the effects if you buy 100 shares in Facebook, right, or Meta, every $1 increase in the share price, you get $100 gain. Yeah, well, every $1, $100 only. So you put in a capital of 33,000. If it goes up by $10, you will earn $1,000, right? My math's correct, right? Yeah, not that bad. So how do you do that if you don't have money? So the better alternative, right, for you to actually profit is actually to use options. And for you guys who do not know what is option, options is very simple. Take it as an orange, as the share. Imagine now you are going metaverse world, right? Metaverse world. Close your eyes. Imagine Facebook shares equals to an orange. And then imagine options is like orange juice. Okay, so yeah, Facebook share orange, options orange juice. Okay, that's options. In a very simple way. Yeah, get it? So for those who like this orange and orange juice metaverse explanation on options and shares, right? Give me a thumbs up. Or those who don't like, give me a love. Yeah. So options is just a derivative on the share. The prices of options would somehow correlate to how the prices of the stocks move. So instead of eating an orange, you just drink orange juice. You are technically consuming the same substance. So instead of buying shares or trading on the Meta shares, you can trade on Meta options. Yeah. Okay, so the first thing which I actually want to explain to you guys is the why options instead of buying the shares. It's actually efficient use of capital. If you look at just now, right, in order to take $100 shares to control 100 shares in Meta, right, you need to pay or fork out 33,000 US dollar to control 100 shares. Okay, and the same thing using options, right? To control 100 shares with options, right? You can actually put up a capital as low as $1,000. Yeah, you will have the same kind of control. That is actually like 3% of the capital only. Instead of $33,000, you can start to trade on Meta with just a capital of 1,000, as low as $1,000. Yeah, to control 100 shares lah. Yeah, so this is efficient use of capital. So first reason. Second reason is, of course, the options can actually provide you higher returns. Okay, and how do you actually get higher returns by trading options instead of shares? Okay, I can actually show you one example here. If you look at this thing, right? Okay, this is actually the options price of Meta with expiry of 5th November. This was actually before. They changed their name on 28th of October. If you were to buy uh, uh, an option which is almost the same strike price as the market price, the market price on 28 was $316.92. So if you buy the closest options price to this, right, you will actually buy 317.5. You buy that option with an expiry of 5th of November, means slightly above 1 week expiry. You actually need to pay $6.35, which is $635. Yeah, $635. You will need to actually buy two options to give you the right to control 100 shares. Yeah, two options to give you the right to control 100 shares. So you're actually paying about $1,270, 1,270 to control 100 shares. Okay, that is what you do lah. Yeah, let me see. Okay, yeah, correct. So I'm going to show you the difference between entering buying the stock and entering the trade using options. The first one was actually just entering it on that day to buy the stocks at 316.92. You buy 100 shares. Okay, and of course you pay $31,692. And on 1st of November, Facebook price went up to 329.98. Went up. Everybody was Meta rocks. So the price change was $13.06 times by 100. So your profit would be $1,306. Yeah, but you put in 316. Yeah, so this is 316 lah. Okay, my maths wrong lah. So this is supposed to be 316 31692. So your returns let me calculate. I don't want to use my brain my math so bad. 1306 divided by 31692. Okay, so your returns is about 4%, more or less the same lah. Yeah, even the number wrong. If with ABC optional answer is 4, I also correct. Calculated wrong here, also wrong. So you actually get a return of 4%. Yeah, by buying 100 shares, but you plow in a capital of $31,000 or $32,000. Yeah, and of course, if you use options, I've actually shown you just now, right, to control 100 shares, 100 shares here, you buy two of these options, 317.5. Why two, you might ask? Because one option at the money, these are technical things lah. You just hear it for fun lah. For those who know, then of course, if they will probably understand it. For those who don't know, connect with me more and I'll teach you. So So one at the money options is basically almost equivalent to 50 shares. So in order to get 100 shares, you need to actually buy 2 at the money options. Yeah. So that's how I got to say buy 2. And then if you buy 2, you pay 1270. Correct? Yeah, 1270. Okay. And of course, the option price on 1st of November went up to 1365. You can actually see here. I go back. 13th of November, right? This price, I actually got it on 13th of November. The option price increased because the Facebook price go up. Like I said, orange juice, right? So Meta price go up, option price go up because it's a derivative. Yeah. So 1365. So it went up to 1365, and as a result, 1365 times 2 is 2730. Okay, so you pay 1270. On 1st of November, it went up to 2730. Okay, so what is the returns? Your profit is this minus this, which is 1460. So your return of investment is 1460 divided by 1270, which is 114%. Can you imagine this? The difference, 4% just now compared to 114. You plow 32,000 US dollar to get 4% return. Yeah, in how many days? 4 days, 3 or 4 days. 3 or 4 days. Yeah. Whereas when you actually use options, right? You put in $1,270, and in 4 days, you get a return of 114%. Can you imagine if you continuously do this? Your $1,270 can technically double every few days. Yeah. And if let's say you just put on this trade and just continuously to trade on Apple when it actually go up, by the time it goes to 390, you are already cannot imagine where you are, going into the meta world already. Okay, so this is actually high return of investment. What the second point, which I actually shown you, right? Higher returns using options. Yeah. And the third point is actually less risk. Okay, a lot of people think that options is risky. A lot of people think that option is risky. It is only risky if you do not know how to use it. Okay, that is the only time it can be risky. I mean, it's just like driving a car. Is driving a car risky? If you know how to drive, it's not risky lah. But if you ask your daughter go and drive the car, right? You scared not? Scared, right? Because they don't know how to drive the car. Of course, it's going to be risky. So the same as this kind of instruments, right? If you do not know how to use it, it is very dangerous. But of course, if you know how to use it, it is just like you driving a car. Yeah. Second nature, you do not need to actually be afraid of it if used properly. Yeah. Okay, so I'm going to explain you why it's less risky. Okay, for example, if you actually trade on Meta, when they change their name to Meta, a lot of people say, crap, what is this? Meta, what does Meta means? Yeah? Meta, Metallica, what Meta? Yeah, I don't know if you saw my newsletter, and I don't know if you know this news about Tima, yeah, a Malaysian whiskey branded as Tima, which got condemned and later they need to change their name. What if that happened to Facebook and people don't like it, people condemn it, and the US government asked them to change their name? Can you imagine? Yeah, the politicians in Malaysia asked this company to change their name because Tima is not appropriate. Can you imagine the politicians in US, right, ask Facebook to change their name because Meta is not appropriate? then the price will drop. So when you buy share, price drop, lose money. Drop by 20, lose $2,000. Okay. And options, the same thing you did just now. You buy that two options at 635, right? 635, you paid 1270. 1270. And if the option price drop, because you bought a call, right? And it's a short-term call, you lose money. You lose all your money. You lose $1,270. So compared to buying shares, and compared to buying options, yeah, which one lose more money? Which one is more risky? Buying stock, right? So this is to show you that not necessary, but trading options is going to be more risky. Yeah, if you do not know how to actually use it, it is going to be risky. Yeah. Wrong spelling. The fourth one is actually strategic alternatives, not alternatives. Too much meta lah. Even the N changed to M. Yeah. So options is actually a strategic alternative to stocks, and of course, because it's actually strategic alternative, right? It is not only having one way to profit when the stock goes up. There is actually various way for you to actually enter into a trade, and you can actually benefit from Facebook price going up. Yeah, there's actually more than one way, and of course, different way. It entails different use of strategy. It has different form of characteristic. Uh, the duration also can be different, and the return of investments can also be different. So with all these different ways, right, you can actually put in a trade that suits you, that suits to your capital, that suits to what kind of expectation or hypothesis you have on where the price can go. If you feel the price can actually go very fast uh, to 390, then you do one type of trade. If you feel that it may need a longer time to actually go to 390, then you do another type of trade. If you feel in the meantime, Meta might even drop for a while before it goes up, you might also go into another type of trade. Yeah, so it's actually different alternatives, strategic alternatives, how you can actually profit on Meta. And I will show you 7 ways. 7 ways. I will just show you because to actually master all these 7 ways, right? You connect with me more, then you can actually learn it. Come to this trader stock every week. Eventually, after 3 months or 6 months, I would say you would have probably covered at least 6 or 7 of these, yeah, through my trader stock. If you've gone through the previous trader stock, probably there are already another 3 or 4 ways to actually do this. Yeah. So today I'm going to briefly show you 7. Okay. The first one is actually just buy a call. Just buy a call. Like earlier, just now, the example I show you is just buying a call. Okay. And a call would be bullish. That means you want the price to go up. The second way is to actually sell a put. Okay. Sell a put means at the other side of direction, you sell a put at a market price lower than the current trading price. For example, now it's actually about 320, 330, right? 330, right? You sell a put at 320, for example. Yeah. Then when the stock price goes up, you will profit in the trade. Sell a put. The third way to do it is actually buy a call bull call spread. Okay, earlier you were buying a single call. Okay, and single calls are very expensive. And to cut your cost down, that means you don't want to actually pay so much. And of course, you also do not expect that Facebook immediately will go up to 390, right? So why pay for a call so expensive? And cut your cost lah. Assume that it will just go up to 350, for example. So you buy a call at 330 current price, sell a call at 350. So if the price goes higher than 350, you won't enjoy the benefit above 350. If the price is in between 330 to 350, then you will still profit lesser, but your cost is also less. Yeah. So this is actually cutting your cost down, buying a bull call spread. And then the other one is actually doing a bull put spread. Okay. Just now, number 2 is selling a put, right? So in order to reduce your capital, that means selling a put will involve higher capital buying power, higher capital stuck. Okay, to reduce your cost, to reduce your capital, and also to reduce your risk. Imagine the US government want to ban Meta name. The next day, Meta goes to zero price. So if you just sell a put, you will go to zero. You need to actually lose a lot of money. But of course, to limit the risk, you do a bull put spread. You sell one put and then buy another put at lower strike to cap the losses, and also at the same time your gains are also capped. It's also capped the same way as the sell put. Both are capped, but you get less premium, get paid less, less risk, less payment. The fifth one is do a diagonal spread. Okay, what is a diagonal spread? Okay, diagonal spread is actually buying a call deep in the money. That means if currently Facebook is say trading at 330, you buy a call maybe at 80 delta, maybe it is $315 perhaps. That means it is lower than the current market price. We call it deep in the money call. And then after that, what you do is sell a out of money call, and that is actually what we call a diagonal. And if you know options, of course, this is also one way. One thing which they call lease to rent. That means it's like if you buy a house and then you rent it out, right? You buy a house, you rent it out to get rental, right? This is the same concept. The in the money call is like a house. That's a house which you buy. Longer dated. It can be 3 months, it can be 1 year also. Okay, that's like the house. And the option which you sell, the call which you sell, is the rental which you collect. That's the rental you collect. Yeah. So in options also, you can be like a property tycoon, but you don't own property, you own stocks that you can actually lease out. Every week you lease out and get rental. Yeah. So this is actually a diagonal spread. And then the sixth one is actually what we call a synthetic stock. Okay, synthetic stock is actually what is actually like a stock. It behaves just like a stock. If the stock price goes up, the synthetic stocks using options will go up. If the stock price goes down, the synthetic stock will actually go down. And how do you actually structure a synthetic stock is very easy. You buy a call, it can be, normally it would be current price 330, you buy one call at the money. At the same time, you sell a put, same strike. It can be same, most of the time it's same strike. Okay, what happens is at the end of it, let's say for example, you buy a call at 3:30 for $10. When you sell a put, you will sell it also around $10. Most of the time you will achieve this. So you pay $10, you sell $10. At the end of the day, you get to control 100 shares in Meta by paying zero. Zero, you don't need to pay anything. Good or not, this strategy. But of course, the risk profile would mirror stock. Stock price goes up, it go up, you $1. The options probably will go up $1. Yeah, because it has the same delta of 100 synthetic stock, but you pay zero for it. Good. Who want to buy share by paying zero? This is the strategy you can use. Yeah. And the last one which I'm going to teach you is actually what we call a zebra. Okay, zero extrinsic back ratio. It's a ratio lah. Okay, what a ratio is means is for this we actually sell one at the money call, one at the money call. For example, you sell 3:30 call, and then you buy two in the money call. You find somewhere around delta 70-ish, delta 70, and you buy two. So when you actually combine these three, that means two in the money call, delta 70, and one at the money call, sell, you combine it, you will reach around 90 to 100 delta, which is equivalent to around 90 to 100 shares also. So you are also trying to actually use this zebra back ratio, right, to actually create a synthetic stock. So there are many ways to create synthetic stocks. One is like this, I told you, buy one call, sell one put. This is another way to actually create synthetic stocks. There are many ways to create synthetic stocks. Like just now I told you, buy two at the money call. That is also a synthetic stock, but that synthetic stock will have only the upside potential. That means the upside you take, the downside risk is actually capped at the amount which you pay. Whereas the other type which you actually do here, the risk profile is actually different. So of course, there are actually many ways, and I'm only sharing you 7 ways. In fact, you can actually structure various ways how you actually want to trade Meta to actually ride on the bullish trend. And how do I actually know how to actually do this? Yeah, of course, I learn and it's not very difficult for you to actually learn all this. I mean, today when I actually tell you, you might not understand anything, totally nothing. The same thing, like when I actually started to learn options, right? I also don't know anything, yeah. But when you go into it, right, and when you actually pick up the concepts, don't pick up the technicals. That means don't pick up the uh technicals, like just now all those things which I actually teach you are the technicals. You understand the concept. Okay, once you understand the concept of options, right, and how it can be structured, right, all those technical things actually comes very easy. It's just like mathematics 50 plus 50 is 100 lah, correct? 70 plus 30 is 100, correct? So these are numbers are actually mainly the structures of how the options are structured. 2 at the money call is equals to 100 because at the money the delta is 50. Yeah, and if you do like all this computation, right, a put is selling a put is what is that? Is negative delta lah. It's negative, right? But that if you plus a call, it will become positive lah. Yeah, I mean, okay, I'm confusing you more. let's not go there. So what I wanted to actually share you is options is so powerful if you actually know how to use it. Okay, and when you know how to use it, right, that's where you can actually leverage on it, right, to actually build up your capital by profiting on all these type of different strategies, right, with lower capital, and that's where you actually get a higher return of investments compared to just purely investing in stocks. You can also use options to invest in stocks. Yeah, you structure it accordingly. But of course, the only downside is that options is actually a decaying asset lah. Decaying asset. Huh? That's actually the only downside. Yeah. But of course, if you know how to use it, how long you can hold it, when you need to dispose of it, yeah, then it would not be a problem for you to actually use it even as an investment tool. Yeah, only if you know how to use it. Okay. So that's actually what I wanted to share with you today. And of course, there's many more things to learn. And if you connect with us more, that's where you will probably become an options expert lah. Yeah, by the time you finish up 6 months of my traders stock here. Yeah, you can review. I think there's 20 over past trader stock. A lot of trader stocks also we share a lot of things like this. Yeah, so I hope you actually enjoyed today, and I hope that Meta will also go to the moon, and I hope that you can actually benefit from what I've shared. And if you actually want to trade this, learn this first lah. Learn this first before you actually start to use it. Yeah. Otherwise, you it's like my daughter driving the car. Very scary. Okay. So thank you so much, and I hope to actually see you next week. If you like the show, please give me a thumbs up. And if you like more people to actually learn what I've actually shared, please do share our traders talk with them. Yeah. Okay. Thanks, Dave. Okay. So bye bye. So I catch up with you next week. Next week, same time, 7:30, and I hope that I will find another interesting topic for you guys. Yeah. So until then, please don't forget to train, trade, and thrive. See you then. Bye bye.